In American society, money is a taboo topic. We're taught at a young age it's improper to talk about it, but we're also bombarded with messages about the power and importance of money in our everyday lives. And by not talking about it, we miss out on the skills and lessons we need to effectively understand and financially plan. That changes today. Welcome to Money Tales. Hosted by Sandy Brager and Cami Doder, Money Tales brings more than 35 years of combined professional experience in personal finance to demystify money and demonstrate what it's like to speak openly about personal financial matters. Join us each episode as they interview modern-day movers and shakers about how money decisions intertwine with their daily lives in order to give you better insight into productive financial conversations. Subscribe today and register for our blog Fathom at aspiriant.com/podcasts to increase your money mojo. And now, here's Cami and Sandy.
Welcome to Money Tales. This week's episode is all about angel investing. We're joined by Marcia Dawood, who is on a powerful mission to make early-stage investing accessible to everyone. This investing purpose became apparent to Marcia when her mother was diagnosed with ALS, a devastating disease. Marcia knew she wanted to drive change that could find cures and solutions to the world's biggest challenges. While she didn't have billions to invest, Marcia discovered angel investing as a way to support entrepreneurs tackling the causes that mattered most to her. Many people think angel investing is only for the wealthy, and it can be intimidating. But Marcia sees this as an opportunity to educate and empower. Let me tell you more about Marcia. She is an angel investor who serves on the Securities and Exchange Commission's Small Business Capital Formation Advisory Committee. Marcia is also a venture partner with Mindshift Capital, a member of Golden Seeds, and the chair emeritus of the Angel Capital Association, a global professional society for angel investors. Marcia wrote the book titled Do Good While Doing Well, and she is an associate producer of the award-winning documentary Show Her the Money.
Here are three key money topics Marcia hits on in this conversation. First, innovation is not constrained to Silicon Valley. There are opportunities for investors to fund entrepreneurs across the country. Second, how making angel investments, which are investments in very early stage companies, does not require a large outlay of cash. And third, how she encourages investors to be thoughtful about how much money they're investing in angel deals and how they're funding those investments. As with other money decisions, align the investments you make with your values, your purpose, and your goals. We hope you share this episode with a friend. Now on to our conversation with Marcia Dawood.
Welcome to the Money Tales podcast. I'm Cami Doder.
And I'm Sandy Brager. Cami, I got a statement in the mail from one of my credit cards yesterday, and usually I don't pay any attention to these things.
Just open and pay.
I keep my credit cards on auto payment so I don't make a mistake and accidentally miss a payment because I really don't want to pay extra fees. But this one caught my attention because it was a change to the account terms and specifically a change to the interest rate. I haven't been paying any interest on this card, but I was shocked to see that the interest rate was up above 30%.
Sandy, what?
Isn't that incredible? I know credit card interest amounts are high. They're always high, but 31.15% is what the rate was adjusting to. I can't tell you if that was an adjustment upward or downward. I think with a decrease in the Fed funds rate is probably a decrease downward, but I was shocked. So I thought it was just a good point to share with our listeners.
It's so important
to make sure if you have interest that you're paying on any debt, whether it's credit cards or anything else, be sure to take a look at the interest rate, especially if it's a floating rate, one that will change as the Fed adjusts interest rates. It's really important to understand what's causing changes to your interest rate that you're paying and making sure that you're optimizing debt that you have outstanding.
Thanks for raising it, Sandy, because these things do creep up for those of us who don't have good attention to detail. That can happen. And next thing you know, you're paying some ridiculous amount in interest, and it's so scary.
Could you imagine a third of your purchase? That's just the stated rate. With credit cards, if you're in a situation where you're paying interest rate, that's compounding daily. It's really important to pay attention. And a lot of people don't like debt. I think there's really good reason to use debt at different times, depending upon your situation. But being informed about the interest rate that you're paying and how it adjusts is super important. Can't emphasize that enough.
Thanks for highlighting that, Sandy. It's my pleasure to welcome our guest today, Marcia Dawood. Thank you for joining us on Money Tales.
Oh, thanks so much for having me.
Would you introduce yourself and share a couple pivotal moments that have taken place in your life that really influenced who you are today?
My name's Marcia Dawood. I'm an angel investor. And back in 2012, I was invited to my first angel investing meeting. My first question was, what's angel investing? I have no idea what you're talking about. And I went to the first meeting. I was living in Pittsburgh, Pennsylvania at the time, and I was just totally fascinated at the amount of innovation that was happening right in my own backyard. I had been working in corporate America, still was at the time, and I was doing kind of the same thing, expecting different results, not really happening. When I went to this first meeting, I thought, have I been living under a rock? This is crazy.
Would you define then just quickly what is angel investing and then keep going?
So I found out that to invest in an early stage company usually happens at the very earliest of times as the company's forming by angel investors. These are people who use their own money. So the biggest difference between an angel investor and what you might hear about as far as venture capital or these bigger funders that come in, big funds that end up backing private companies, the biggest difference is that an angel investor will invest with their own money, and usually at a much lower dollar amount than what a bigger venture capital fund would.
And right out of the gate, when you're not even sure what's going to happen with the company, correct?
Lots of risk.
That's right. Lots of risk. That's why we tell everyone that they should diversify, which I'm sure you've talked about many, many, many times.
Yes.
Would you please proceed with your pivotal moments?
That was one of them, I guess, when I first realized that there were so many entrepreneurs out there working on incredible things. And then came to realize that I ended up in 5 different cities over a 10-year period. So from 2010 to 2020, I lived in Pittsburgh, New York City, Dallas, San Francisco, and Charlotte, North Carolina. In those 10 years, I got to see all kinds of different things. When I first learned about entrepreneurship and the things that were happening, I thought, oh, well, that only really goes on in Silicon Valley or out in California, San Francisco area, where we always hear about these companies. Maybe New York too. I didn't really know that much about it at the time. But come to find out that there are innovations happening in every city, in every town, and really everyone can be involved. And that was the one thing that I was so surprised by. In 2016, the Securities and Exchange Commission, they changed the rules, and now anyone can invest in an early stage company for as little as $50 through equity crowdfunding. We could do a whole podcast episode just on that. This is a way that pretty much anyone who wants to, who has internet access and a bank account, they can go and help one of these companies. And even if somebody didn't want to necessarily use money to start, because like you said, it is risky. So we always tell people, dip your toe in the water, do a little bit of looking around before you start writing big checks. This is something that people can do. They could volunteer their time. They could help with their level of expertise or their network. So there's lots of ways to learn about what's going on, but just knowing what's going on in your own backyard. Let's say that you had a really specific thing that you cared about, because speaking of pivotal moments, another moment in my life that was quite pivotal is my mother was diagnosed with ALS, Lou Gehrig's disease, which is very horrible disease, kind of a little bit of the opposite of Alzheimer's. So Alzheimer's, you can't remember, but your body's pretty mobile. ALS, you can't move your body, but you definitely know everything that's going on. And eventually the final thing that can't move are your lungs, so you can't breathe. And she passed away in 2018. And after that, I started to look at different things that were happening out there. And I thought, wow, I care about trying to advance a cure, a treatment, something for this terrible disease. That became my why. That's how I ended up doing a TEDx talk at TEDx Charlotte. I ended up writing a book called Do Good While Doing Well, because I started to get frustrated. I'm not a gazillionaire. I don't have lots of money that I can put toward this. I put as much capital as I possibly could, because in our angel world, we basically say you really don't want to invest more than 5 to 10% of your investable assets because, like you say, it is risky. So I maxed myself out. But then I thought to myself, wow, there's so many other things. Like I wish I had buckets and buckets and buckets of money so that I could help all these entrepreneurs. Well, wait a minute. What else could I do? Well, I would start to talk to people. Hey, have you ever thought about angel investing? What about you? What about you? And they would say, I can't. Oh, I couldn't do that. And I'd say, why? And they would say, well, that's just for rich people and the well connected. And I don't have a finance degree, so I couldn't do that. And I'd be like, yes, yes, you can. You can learn. You can get involved with groups. You can learn with other people. You get to like meet other people. It's really fun. There's just this myth out there that it's just for people who are the uber wealthy, who are going to be able to get connected and get invited into rooms. So many doors have opened in the last, especially 5 to 10 years, that now many more people can get involved. But I think they're scared because it seems intimidating. It seems a little daunting. I just don't really know where to start. So that's why I'm on this mission. By writing the book, I wrote a workbook. And even in the workbook, I have lots and lots of exercises, which totally go along with this podcast about how do you feel about money? What's your relationship to money? All those kind of things.
You are saying exactly what we are saying every week on Money Tales, the importance of having these money conversations, because through that, you can break away and chip away at the myths. I think it's so powerful what you're doing. We'd like to start and really understand our guest's backstory around money. So if we can take a step back in your youth, when did money start having meaning to you? And what was going on at that time?
I was super, super lucky. So, first of all, this was before any online banking. I'll date myself here. But my dad had a box. It was just a little shoebox, basically. And he would take all the bills that would come in the mail every month and he'd put them in the box. And at the end of the month, when he got his paycheck, he would go and pay out all the bills. And I remember from a very early age, I'm talking probably 7 years old, even, he sat me down and he would show me what he was doing. And he would show me his checkbook registry. And he would say, okay, this is how much money we have for the month. And this is how much we're putting in savings and, all the things. But then this is how we budget. These are the rent, mortgage, whatever it was. This is for food, all that stuff. And I just started to learn about this budgeting thing. You guys were talking at the very beginning of the podcast about this interest rate thing with credit cards. Well, I will tell you that was probably one of the best lessons I ever learned from my parents. They used credit cards because back then, just like today, you could get points or rewards for the things that you were doing with a credit card. But they were so careful because of those hidden interest rates and the fees and the late fees that people would put on top of it if you weren't paying attention. They would say, make sure every month you pay off that credit card. And I did that every single month for my entire life. They really taught me. And I think the biggest message that came through my whole childhood was do not spend above your means. You have your means, you have your budget, and you don't go over that. I'm also zodiac sign Cancer. It's not that I'm a huge zodiac person. However, I have read the things about a Cancerian, and we are savers, man. We like to save. We like to have everything compartmentalized as far as money. Sometimes when I read the little descriptors in the horoscope thing or whatever you see in the paper, I would just laugh because I would think to myself, that's so mean. Oh my God, they're describing me. It's like they said, here she is. She's just a little bit conservative when it comes to money. So it's actually kind of funny that I grew up that way. And in my brain, when I think about budgeting for my personal finances, and then I think about this investing in risky angel stuff, I think to myself, wow, you wouldn't think that somebody like me, who has this conservative, buttoned up attitude about money, would think that this is a good thing to do. However, I think it's a great thing to do. And the reason why is because buckets. I have this bucket in my mind. This is the money that I'm going to take, this little chunk, not a lot of my whole investable assets, but this little chunk. I'm going to take this, and this is the money that I'm going to use to invest in these early stage companies. And why? Because I care about what they're doing and I care about advancing these technologies or whatever it is, helping women, helping people of color to be able to get more funding because the amount of funding that they get is abysmal. How can I do that? Well, that's my mentality now is I take this little bucket and then what happens in that bucket, all good.
Diversify away. In your early years, you have the benefit of learning some really great money management skills. You're naturally a saver. Take us to the point where in 2012, you went to get educated about angel investing. What brought you to that forum, to that meeting?
I was invited. I think even up until 2012, even like 2015, you almost had to be invited. You were invited into the room, to see what was going on. Since 2015, 2016, and all these changes within the Securities and Exchange Commission, stuff like that, there's so much more that's online. The other thing that happened is with COVID, turning everybody to Zoom, a lot of angel groups, which had been in-person meetings, regional only, very focused on what was going on right in their own backyard, very apprehensive to invest in a company or a founder that was too far away. If they couldn't drive and see the founder, have lunch with them and get home in time for dinner, probably not going to happen. But because of everybody going online in 2020, things really opened up. And now you'll see groups that normally would never invest in a company that they'd never met in person. And it's all happening. And you'll see a group in Cincinnati investing in a company in California or vice versa. You just started to see a lot more open up. And now I think we're just like at the very, very, very tip of democratizing the private markets. So if you remember back in the day, and I won't go into a whole thing about this, but when you wanted to invest in a public stock back in the 80s and 90s, you had to have a market maker, you had to get a brokerage account. The fees were terribly high. Remember, like hundreds and hundreds of dollars you had to spend to invest in a public company. Now you've got Robinhood and E-Trade, and you can go on there and you can invest in a matter of seconds for no fees. It's crazy. Someday, I think the private markets will be like that, but we're kind of at the very tip of the beginning of that. You're starting to see these online platforms that allow you to do equity crowdfunding, debt crowdfunding, all kinds of things, even investing in a traditional angel deal or a private company can all happen online now. Lots and lots of things are changing. And as we see technology happening faster and faster and faster, I think this is going to do the same thing.
How are you investing your money before you were invited to go to the event in 2012? How'd you think about investments? What were you investing in? Give us some backstory there.
I think I was a very traditional corporate America person. I had a 401k plan. I thought that was my retirement. I didn't necessarily invest in a lot of other things outside of that because I didn't feel like I knew enough about it. I dabbled a little bit, and once the fees started to go away and you could have an E-Trade account, I would have a little bit of money that I would put into that. Growing up in a relatively conservative household where we were taught making sure that you saved and you had everything in the right place, 401k plan was the thing. Having this ability to invest in retirement was my mentality. I never really thought about investing much past that. Plus, I was on my own. I was working in a decent job, but most of my paycheck was going to pay my bills and to do some of the things. And remember, I didn't run up any debt. So I was paying everything off all the time. So I was trying to be really conservative at the same time. So I talk to a lot of people who say, hey, I have a 401k plan or I have a little savings account, but I don't really know what to do when it comes to investing.
This picture you painted about angel investing forums and being really localized about the people attended and the investments made, how they changed as a result of COVID and technology and many variables. How are you seeing money conversations change or not since you first started in the angel world?
I'd almost have to say or not as far as money conversations, because if I think about it, yes, all of those things opened up, but it was preaching to the choir. The whole choir might have opened up to a bigger area. There's more churches or whatever, you want to use that analogy, but there weren't necessarily more people involved in the conversations. It was just that now the groups in the Northeast are talking to the groups in the Northwest. I don't know how many actual money conversations were happening. And I can tell you from personal experience, I was raising a fund at one point where we were trying to pool money together so that we could invest in women-led companies across borders. Lots of things going on there. When we said women-led, we weren't saying only women teams. We were saying diversity in the team, men, women, but we wanted to see a woman in a relatively prominent role with a meaningful amount of equity. Raising that fund, I would talk to women all the time and they would say, "Oh my gosh, I love this. This is great. I'm so excited that you're doing it." And I would say, "Great." And these were definitely women of means who had money to invest. And I would say, "Well, great. How about you become an investor?" "Oh, me? No, no, no. I can't do that. My husband does all the investing, or that isn't something that I do, or I don't really know enough about that." And it's not anybody's fault that that mentality exists. I just think we have a problem as far as how we as women have been conditioned from the very beginning. There's this stigma out there that women do the philanthropy and men do the investing. And I heard that over and over again when I was trying to raise this fund. And it was frustrating because I thought to myself, wait a minute, women, we all need to take ownership of this. And we need to be the ones in the room helping to get more funding to the women who are driving the innovation that we as women want to see. Do you know how many people are actually working on things for women's health? There are a lot of things out there being worked on for health. But do you think that they actually separate it to, let's say, even something like heart disease, which affects everybody? And we know that it does tend to affect women even more than men, but let's just use it as straight across the board. How many times have there been studies that were done for heart disease specifically on women for heart disease? Very rarely. These are the types of conversations that we need to be having because we're not going to get the funding to the women who are trying to drive that innovation, whether it's healthcare or consumer products or whatever it is, that is really targeted to women, unless there's women in the room helping make the investment decisions.
And the research decisions too, apparently.
That's exactly right.
Tell us, Marcia, when it comes to angel investing, there's so many opportunities. You've described different networks that people can join to learn about the opportunities to crowdsource and invest together, either as individuals or through different funds. How are you thinking about the dollars you're going to commit to a particular deal? How do you think about that from the standpoint of investing in brand new companies that, if they're successful over time, will have other rounds of capital raising that you may want to participate in?
When I got started, I had what I call shiny halo syndrome. It was basically like squirrel, squirrel, squirrel. I would see something and I was like, "Oh, I love that company. I love that entrepreneur. Oh my gosh, they're so great. Look at what they're doing. That's so awesome." I was literally that crazy person who just would be like, "Okay, I want to invest in that. And I want to invest in that. Da, da, da." And I would get so excited. And I've seen this happen over and over again with new angels, that they really love these companies that they're meeting because all entrepreneurs have a certain charisma about them and they're always working on something that is so cool.
If it wasn't, they wouldn't be working on it.
That's right. They wouldn't be working on it. But I got to a point where I was like, okay, I think I made a couple mistakes here along the way. I invested in some things that I probably shouldn't have. I probably invested too much money in certain things. And to your point, which was a great one, is what happens when they need to raise money later? And I didn't have any money to give them. What I did is I made for the book a Halo strategy worksheet. It helps people to align, what do you care about? What do you want to invest in? How much money do you even have to invest? For everyone, it's going to be different. Some people it's going to be a little bit, some people it might be more, whatever it is. And what's your time horizon? Some of these deals take a long time till they have a positive exit, and you hope it's a positive exit.
Can you define long time, just to be clear for people who aren't familiar with this?
Long term could be 5 to 7, maybe even 10 years until there would be some type of a liquidity event. So the biggest reason, not just that the company is early, yes, that's probably the biggest reason that investing like this is risky. But the other thing that's risky about it is it's illiquid, meaning that you're making the investment and you're not able to do what you can do on E-Trade. If I make an investment in a public company and I'm on E-Trade and I decide 5 minutes later that I need that money back, I can go ahead and liquidate, get out of it, put it right back in my bank account. But I can't do that if I invest in a private company or an angel investment we're talking about. So that illiquidity does come into play. And that's one of the things that I really caution people about in my book is you have to be thinking long-term. So this could take 5, 7, 10 years. Don't use your kid's college fund to invest in angel stuff. Those are the types of things, when I think about it now, I think about, okay, what are the things I care about? How much money do I have in my bucket? And then how am I going to think about that from a liquidity standpoint down the road? And as I do end up having exits from the investments that I made in the past, then what do I want to do to recycle that money back into that whole industry and back into the entrepreneurship world?
There's a big record keeping function here.
There's a lot of work. Marcia, you brought back buckets, and I really appreciate that. As you think about your angel investing, you've talked a lot about return. How is this going to do? And you've also talked about purpose aligned with what you're trying to see, the change you want to see in the world. Which bucket do you put your angel investing in? Is it in your investments bucket, your philanthropic bucket?
Nowadays, that bucket can actually be, in a way, combined, because you can use philanthropic dollars to invest in a for-profit company or an angel investment. But then what happens is that money, if you set up a donor advised fund, that's basically a way that you can take philanthropic money. So you would basically put money into an account and you would get your tax deduction just like you would if you were making a donation to a 501c3. And that money would sit in that account. During the time that it's sitting there, it can be invested in stock or an ETF or a mutual fund or something else while it's sitting there before it would actually get deployed to your charity of choice. In some cases, depending on the type of donor advised fund, you can take that money and invest it in a for-profit company while it's waiting to go to your charity of choice. That's something that has gained immense popularity. It is something that I believe will continue to grow because there are literally hundreds of billions of dollars sitting in donor advised funds right now that aren't really being utilized and that could be in order to help get more capital to women, get more capital to people of color, get more capital to the innovations we want to see in the world.
It's something that many of our clients are choosing to take advantage of, Marcia. So I'm glad you brought that up. It is a little tricky to think about because you need to be very careful with your allocation and the liquidity within the donor advised fund to make sure you have money along the way. But there is a lot more flexibility, which supports your earlier point of how the private markets have really changed a lot in the ability to invest in the private markets. And it's been pretty thrilling, I think, to see that the private markets are way bigger than the public markets. Marcia, I'm curious, as you think back on the investments you've made, what's the one investment that you're most proud of and why?
There's so many interesting companies, not to get into a lot of the detail here, but I tend to like to invest through funds. And a fund will let you take a little bit of money and then you get the ability to have that money spread out over several investments. So instead of taking $10,000, let's say, and investing in one company, you could take that, put it into a fund and maybe get exposure to 10 companies. In some cases, I have little tiny exposure to a lot of different companies through these funds. And I think that's really an interesting way to learn. And it's also an interesting way to diversify your portfolio. The one company that I really love and has just done amazingly well is a company called Joy Lux, and they're very involved in women's health. They've done a lot of things as far as women's pelvic floor health, and then it's evolved now into more with menopause and postpartum and all kinds of things. What I like about that company so much is they have taken all of the knowledge that they have, they've taken their team, and they've been able to pivot at times when things were out of their control. For example, March of 2020, when we all went into lockdown. And this is a team of people, a team of women and men who were able to really make a huge difference in how the company was going to thrive and survive in such a trying time. And we've heard about so many companies that haven't done well through the pandemic. So I'm really proud of that company because they're doing something that's amazing and they're helping hundreds of thousands of people, but they are also a company that has taken everybody, all of their stakeholders into consideration as they made decisions, not just their customers, but their employees, how they treated their employees, their shareholders, everybody.
It's nice to just hear the example and round out what you've been sharing with us. Marcia, tell us, what's your next money conversation going to be and who's it going to be with?
I do have this podcast, The Angel Next Door. I started it because I just wanted people to see themselves as angel investors. I would talk to people, they'd say, no, that's just for the rich. I'm trying to demystify everything. However, I started recently to record some episodes talking about money because I find it so fascinating that when you start to get into talking about investing, of course, the idea of money comes up, and then people might not even want to continue to talk to you about angel investing because they have this weird relationship with money, but they don't want to say that. So then they just don't talk to you anymore. I'm trying to see how is it that we can make people feel more comfortable having conversations about money. That's why I love your podcast so much. And I think those are the types of conversations I want to have with people more. I want to have conversations about, well, how do you feel about investing? I talk to some people, they say, well, investing means I have to get a financial return. And if I don't get a financial return, then I'm going to look like I'm not a very good investor. But that doesn't have to be the case. So how can we turn all of that around?
Oh, Marcia, you're so good. We love that you're having these conversations on your podcast. Where's the best place our listeners can find you?
You can go to my website. It's just marciadawood.com. So I got really lucky because my name is a little bit unusual. So there are not a lot of Marcia Dawoods out there. That's helpful, which means you can find me really anywhere like that. LinkedIn, Instagram, nothing fancy, just my name.
Marcia, it's been an absolute pleasure talking with you on Money Tales.
Thanks so much for having me.
Thanks for listening to the Money Tales podcast. If you've enjoyed this episode, share it with someone you think would benefit from listening. And leave us a review on your favorite podcasting platform. Your ratings and reviews help more people find our podcast. If you're inspired to gain clarity and peace of mind about financial matters, don't hesitate to reach out to our team at Asperient. Go to asperient.com/start a dialogue. Or you can email Sandy and me at podcasts@asperient.com. See you next time.